Pathway to Success, the course aimed at building a thriving mindset and providing essential tools for achieving your goals in personal finance, presented by the professionals at KVR Team. This course is designed by a financial professional. However, it is meant to be used as an educational resource only. It includes vital information about very critical factors which can determine our level of failure or success in reaching financial goals. It also provides tools and strategies that can help you put money to work instead of always working for money. The following information is not intended to be considered as accounting, investment, tax, legal, or financial advice and should not be taken as such for any particular individual. Please consult with a licensed professional for specialized advice and to build your financial plan. Building your financial fortress. Your financial fortress will allow your money to stand the test of time and get you through storms that may come your way. They include insurance, debt management, and an emergency fund. Insurance. The right amount and the right type. Insurance can contribute greatly towards achieving financial independence when used strategically, providing money, which is tax-free in most cases, to families not only in the case of death, but also for qualifying illnesses and injuries while the insured is alive. According to Insure.com, only 59% of Americans have life insurance. About half of those people do not have as much coverage as they actually need. Most of them have only group coverage with an employer. This type of coverage usually ends when a job ends or only continues with a much higher cost premium. Group coverage is usually 3 to 5 times whatever a person's salary is. It is simply not enough in most cases, and this type of insurance provides no living benefits. Most people who have life insurance independent of their job are covered by term policies. This is because term coverage usually has the lowest premiums. Term policies cover a person for typically 10, 20, or 30 years. Coverage will stop once the term ends, and if you want to continue it, there will be a higher cost due to age. There may be a physical examination requirement at that time as well. Another type of coverage is called permanent. It can cover a person for up to 120 years, which lasts the entire life of most people. It costs more because the payments are designed to stay the same for the life of the policy. Part of the money paid when a person is younger is used to keep the coverage going when they are older. When you are purchasing a life insurance product, always check to see if it offers long-term care as an added benefit. It is usually a very small cost to add if you qualify. Life insurance pays out dollars for just pennies paid in. But for it to work best, you must have the right amount and type of coverage for your situation. Most people only have about 10% of the coverage they need, if they have any at all. Often, they have insurance that doesn't cover what they think it will, or their family has outgrown it in some way. Insurance coverage should be reviewed every 3 years at a minimum to stay up to date. The people left behind typically need 10 years to replace the income that has been lost. Also, there are many expenses which may need to be paid, such as home loans, college tuition when the kids are ready, and other outstanding debts that will otherwise remain unsettled. As a guideline, the recommended amount of life insurance to have is about 20 times the amount of money you make in 1 year. Here's an example of how we can find out the amount of coverage someone should have. In this example, a person has $75,000 in credit cards, loans, and other outstanding debt. Also, there is usually a 10-year period needed to recover the income of the person who passed away. For instance, income at an average of $60,000 per year for 10 years would be $600,000. Add in the average cost of a home at $300,000, education $240,000. This assumes $60,000 a year for 4 years of college covering 2 children. The total coverage needed in this example would be $1,215,000. Without proper protection, the loss of an income-earning family member can cause a lot of hardship. it is very important to get covered as soon as possible. Many companies require some sort of medical exam and blood test depending on the coverage amount you need and other factors. Americans are at risk for many chronic illnesses such as heart disease. It is better to have protection before any health problems occur because in many cases, you will likely not be approved for coverage afterwards. The main source for getting health information about people that insurance companies use is the MIB, or Medical Information Bureau. It shows all the medication you've been prescribed and all of your documented medical and insurance history as well. The best rates are reserved for those who are healthy, and the younger you are when you get covered, the lower the rates are. When put together properly, a life insurance plan is also tax-free for both the living benefits and for the money given to the people you name after you pass away, your beneficiaries. Debt management. The key thing with managing debt is having a plan that allows you to reduce the total amount of money you will end up paying back as quickly as possible. Then remain vigilant in minimizing any future debt that cannot be used to create income streams. Consumer debt must be managed and kept under control. For instance, limit credit card purchases to those that can be paid back in full the same month. We must keep spending to an amount that is less than what we have left after we pay ourselves first, then pay our monthly household expenses. One effective spending strategy is called the 5 rule. It goes like this: don't buy one of anything that isn't a necessity unless you can buy 5 of them at the same time. Part of becoming financially free means old habits that do not contribute to our goals must change. The good news is this information may help you replace those old habits with new habits you can start on right away. Wipe out your bills with the debt eliminator concept. You can eliminate consumer debt sooner than you might believe. There is a powerful method you can start right away using your income or with money that you borrow from yourself using our infinite banking concept. This has the effect of eliminating debt even faster while putting compound interest to work for you at the same time. For this example, we will use our income. Take the smallest debt you have and add $100 to the minimum payment you make each month. This extra $100 can be found in places where you spend money each month that you can instead use to start erasing debt. Track your spending and reduce it wherever you can to make room for $100 to add to the monthly payment of your smallest bill. Once you have paid the first bill off, take the same batch of money and continue paying the next larger bill. Add it to the minimum you were already paying on that bill. Keep using all of the money you were paying to those earlier bills for the next bill on your list. Keep going until you have paid them all. In many cases, the time needed to pay off all of the debts can be reduced by as much as half when compared to making minimum payments. This concept can be used to pay off a home loan much faster as well. After eliminating all your consumer debt, consider placing money into a tax-advantaged account that guarantees no loss in value. Have an emergency fund. Put aside a total of 6 months' expenses in easily accessible funds by paying yourself first. The most common advice says you should put aside 10% of your earnings every time you are paid. Consider keeping cash or other exchangeable stores of value, such as precious metals, that equal 3 months of expenses in a safe place at your residence. If you can manage to save half of what you earn every month, it will allow you to keep your desired standard of living for an indefinite period of time if there is a loss of income. Consider a tax-advantaged account for your emergency fund as well. For any questions or assistance, please contact us at kvrteam.com.